Hello and welcome to this episode of Acrinos Access. I'm your host, Eric Matei, joined today by Eric Levenhagen of ProWise Financial Consulting for the last of a multi-part series that Eric's been joining us here at Acrinos Access, unpacking this world of profit first and the financial harmony framework. And in this final episode, Eric's going to share with us some best practices for profit first and financial harmony in your practice. So, Eric, welcome back to Acrinos Access. Thank you for joining us.
Thanks so much for having me. Is this 5 already? This feels
I think it is. I think it is.
It's great.
And look, for those of you that this may be your first time tuning in, once again, this is the 5th of 5 episodes. So go back to the very beginning and kind of soak it all in. In the first episode, Eric introduces us to the concepts of profit first and financial harmony. In episode 2, we're laser focused to do a deep dive into these concepts applied to the cold start and doctors that are in their early years of ownership. In episode 3, we take it into the peak earnings years of your business. And in the last episode, episode 4, Eric shared with us some insights around application of profit first and financial harmony to the mature practice approaching partnership or transition. And in this 5th and final episode, it's all about the best practices to make it happen, no matter where you are in your business life cycle. So, Eric, maybe we can start with just a brief little recap of what we're referring to when we're talking profit first and financial harmony.
Sure. Yeah, you bet. So the financial harmony framework is our all-encompassing framework for success in business, and it includes things like your personal prosperity. So there's 3 main pillars: personal prosperity, which talks about making sure you're financially aligned with your goals; work-life harmony, which is making sure that you're spending your time in the way that you want to; and financial clarity, which is all about the business performance. And then profit first is a component of that financial clarity section when we get into cash flow management. So profit first is really just a cash flow management tool that allows you to have more insight into your cash position on a daily basis, so you know where you stand and don't have to wait for anything to be processed. I mean, there's a real-time feedback loop that comes with that and allows you to capture more of your free cash flow.
Love it. Love it. So now let's look at best practices.
Mm-hmm. Yeah, for sure. I mean, I think, just talking about profit first, where we're just at, if you're unfamiliar with the system, right, the main mechanical aspect of it, because there's a mechanical piece that needs to happen, moving money around into different buckets. And there is a really the super benefit of profit first comes in with the behavioral and psychological components of it. It's leveraging existing behaviors to allow you to manage your cash better. So we can unpack that some other time. But the mechanical aspects of it are really setting up these different accounts. And the core system talks about, making sure that we separate out into the following buckets, right? There's profit. The name is profit first. We need to list that one first. So there's profit, tax, owner's pay or owner's comp, and then your operating expenses. And so the core system has these 5 accounts, and if you expand it a little bit, in the book, it actually talks about 7 accounts. I think the best practice for it is just to get something started. A lot of times people, hear about the system, read the book, or hear about it through a presentation, and they think it's either intriguing or it's like a little bit crazy. Like, why would I go through all this work? It sounds like a lot when we're explaining it. Really, in practice, it's not a ton of work. It's not going to add a ton of work to your overall financial management. In fact, what we find over time is it reduces people's workload and stress when it comes to managing cash, right? So because it's very structured, because of the structure. And just getting something started. I mean, I've had clients and talk to companies in all stages. If you're struggling with cash flow right now, mean, the simplest thing you can do is like baby step number one on this is open up that separate profit account and start dumping 1% of your collections into that account. That'll start to build the muscle, and it'll get you thinking about it in a different way, and it gets it intriguing, and you'll want to go for more, right? But 1%, the reason why we start that, because nobody really misses that, right? If you can run your business on $1,000, I'm pretty sure you can run it on 990, right? But it's just building a muscle is what we're trying to get you there. The other big thing with that system in particular, and with any system, I've always taken this approach, but some people, and I would say, I have to back up. I lied. I shouldn't say always. I shouldn't deal in absolutes with myself. Most of the time, I try and keep this reference, but I think there was a time in my life where I did it differently, where, you know, you look at a system or you look at something that somebody puts out and you want to follow it to a T because you think that's the way it's going to work the best or work out. And with Profit First, these different buckets, I mean, look, we've had people run this thing with 3 accounts. Remember, I talked about like 5 to 7 accounts is the core system.
Sure.
We've had people run this system with 2 or 3 accounts. We've had people run it with 20, right? So what are we saying there? It's modify that system so that it meets you where you're at and allows you to grow or achieve the goals that you've set out. But modify it so that it works for you.
Absolutely.
The behavioral and the psychological components of that and the benefits are all going to be there, even if you change it up. Does that make sense?
It absolutely does. It absolutely does. So as far as that first step, it's a matter of, and I like how you just said, like, a very simple starting point is just take 1% of your collections and throw it into a profit account, right? Yeah. To start to change that behavior. I like how you said it kind of gets the muscle, right? It gets you thinking in that manner. I also like how you put it in the context of it's all about having these buckets, right? And so while you can have as few as, say, 2 or 3 buckets and as many as, 20 buckets, that's a lot. But that sweet spot, you say, is like that 4 to 7, right? Where we can have separate buckets for profit, tax, owner compensation, operations, right? And again, it gets us on this path where that money is moving and going into the proper accounts, and we're seeing it in the proper accounts. And it totally changes the way that you're going to approach your business and your cash flow, because this stuff is hitting where it needs to go, and you're not having the I forget you used the term. I feel like you used the term in a prior episode talking about where, like, if everything's going into one account, you can just kind of be like misled, or what was it? It's balance. Is it balance banking?
Yeah. So the behavior that we're leveraging is bank balance accounting, right?
Yes.
Which is which you can still. So here's the lovely part, and here's why I say this is leveraging behaviors, because, as you well know, like, behaviors are tough to change. So we're not looking to change necessarily everything you're doing, but add in, like, at our core, but add in some steps in between there so we can still fall back on when we get busy and get into, the day-to-day cycles that we fall into. We can still default back to that core behavior of looking at our bank account, because most of the time when we're looking to make a financial decision, and this is oversimplified, of course, but when a decision comes up, what do? We pull up our bank balance. We can do it on our phone now, right? And you look up, you see if you have the money sitting in the account. If you do, it's usually a yes, and if you don't, it's a no or not for now type of decision, right? But that's our core behavior that we're going to. So if everything is already segregated, because the other thing that's happening when you're operating out of all this one account is that there's some mental earmarking going on, right? Like, you pull it up and you'd be like, oh, well, I know I've got payroll coming up, and my accountant says I need to make an estimated tax payment in 2 weeks, and I've got this, I've got that. Like, there's all these mental earmarks that we're trying to basically run a cash flow forecast in our head multiple times throughout a month. Yeah. And it's like, okay, why don't we just simplify that? If we simplify it by just taking those, instead of mentally earmarking it, let's physically earmark it. And that's what the separate accounts are doing, right? So when we talk about people having, multiple accounts, beyond those core ones, I mean, what are some of those things? Those are typically tied to what they want to do next. So are we saving up for a new hire, right? And there's other associated costs that maybe go along with a new hire, depending on who that person is, right? Maybe you're at a stage where another associate is gonna require more equipment, is going to require more support staff, and so there's other associated costs in OpEx that are going to go up. So, or maybe it's just a big equipment purchase. You're going to expand into dry eye treatment or myopia management or something else, or you just need a regular fund to replace the equipment that you have because it's you've been at it for a long time. Whatever it is, right? Like we can earmark those specific things. They're really just an offshoot of that profit account. That profit account is there to, when I say capture your free cash flow, right? And there's generally 4 made uses, kind of system approved uses of that profit money. And that's why we have people start there too, so they can kind of see that. And if they understand that the main uses of those funds are going to be, and this is kind of in order, is you're going to first look to use it to eradicate debt. If you have bad or high interest unsecured debt on your balance sheet, we want to get that out of the picture. So eradicate debt is first. If we get past that point, or when we do, I should say, then it is a combination of rewarding yourself as the owner, because as the owner of a business, you get paid in 2 ways. You get paid for the work that you do, but you also get paid because you own the thing, right? Think of it like shareholder dividends in a corporate world, in a public company or something. So you want to reward yourself as the owner for running a profitable enterprise. You also want to start saving for your future growth and expansion. And part of that is also building up an emergency fund of sorts, or core capital needs in your business, so that business fluctuates, you've got some money to fall back on. So yeah, I mean, it's just aligning those different accounts and things with your goals and what's next in the practice, and then just following through and just constantly retweaking it. But it'll allow you to, when you pull up that bank, fall back into that bank balance accounting, right? And you pull up your accounts online, you're going to go to look to the bucket that you're looking to spend out. Usually it's OpEx. Usually it's an OpEx, operating expense decision that we're trying to make in that moment, right? And so now, same type of process, same type of behavior, but the plate has shrunk, right? The serving tray,
Sure.
of all the money in the practice has shrunk down to really, what do I have available? And that's a powerful thing.
Yeah. Wow. What a fascinating look. And I know this was a very high level look, right? But Eric, what a fascinating look at Profit First and applying it to the practice truly. And to our listeners out there, no matter where you are, if you're early on, just cold started, or just personal practice in the early years, if you're a few years into practice ownership and you're hitting those peak growth years, or if you're eyeing the transition, what you just laid out, Eric, is really powerful. It certainly applies to any business at any phase of that business life cycle. And I tell you, I think also that's a lovely way to kind of wrap up this series, right? And to our viewers who maybe this is the first one you've tuned in on, again, this is episode 5 of 5 that Eric's joined us here at Aprinos Access, unpacking this world of Profit First, the financial harmony framework, and applying it to different phases of the practice life cycle. So, Eric, before we wrap up, how can folks get in touch with you to learn more, or perhaps learn how ProWise Financial can help them achieve their goals?
Absolutely. The best step, if you want to take a deeper dive into what we do, is going to our website, prowisefinancial.com. We have a free assessment on there. You just go to the website, click the Get Started button, and take this free assessment. I think it's like 10 or so questions. It takes you probably less than 10, 20 minutes to do. But it'll give yourself a free assessment, and you can self-assess your performance or your results in all the areas of the financial harmony framework, and let you know what you need to focus on next, right? To be able to continue on the path of success. And I'm always open for people to reach out as well. If you have a question about anything you've heard in here, just reach out to me directly. I answer all my own emails still, so I'll respond to you personally, and I look forward to hearing from people. It's great.
Yeah. Well, Eric Levenhagen, ProWise Financial Consulting, thank you again for joining us here in this Krinos Access mini series, looking at the world of profit first and the financial harmony framework. And to all of our viewers out there, as you're navigating practice ownership, whether you're getting into ownership, you're looking to really maximize the scale of your business, or you're looking to sell your business, head on over to Krinos.com. Check out all the ways our solutions and advisory are helping doctors just like you achieve their goals. So on behalf of all of us here at Krinos, thank you again for tuning in. And Eric, thank you again so much for joining us here at Access.
Thanks so much, Eric. It's been fun.